Breaking support and resistance. Support and resistance is where demand and supply meet. As long as there is equilibrium between supply and demand, the price will remain in the trading range between the levels of support and resistance. When price finds support, buying pressure increases, causing the price to go up. When the price finds resistance, selling pressure increases, causing the price to go down. The price will remain within this trading range until something disrupts the relative balance between supply and demand, causing the price to drop or soar depending on what buyers and sellers are doing. Support and resistance also represent the psychological barriers that buyers and sellers base their investments on. When price reaches support and the buyers feel confident and positive about the state of the market or a specific trading security, they buy aggressively, causing the price to rise. When price reaches resistance and the sellers are concerned and have negative feelings about the state of the market or a specific trading security, they sell heavily, causing the price to drop. No matter how strong the barrier of support and resistance can be, those levels can also be broken. When looking at the chart, think about how it is like looking at the inside of a multi-story building. When the price goes up, it meets the ceiling. When the price moves down, it meets the floor. When the price drops and meets the support level or floor, the buying pressure should be there to hold and eventually push the price back up. If the floor is weak, price will break the support level. What was support now has become resistance. What was a floor is now a ceiling. The same is true when looking at the upside of the chart. When the price rises and meets the resistance level, the ceiling, the selling pressure should be there to hold and eventually move the price back down. If the ceiling is weak, price will break the resistance level. What was resistance now becomes support. What was a floor is now a ceiling. When the price rises up and meets the resistance level, ceiling, the selling pressure should be there to prevent further increase and eventually push the price back down. If the bears, the sellers, are not stepping in with strength and the bulls, the buyers, are willing to pay higher prices, the resistance level will eventually fail to stop the rising wave and the price will move up even further. When that happens, the resistance level now becomes support level and the price will keep moving further up until it reaches the next resistance level. The other side of the equation is that when the price drops down and meets the support level, also known as the floor, the buying pressure should be there to prevent further drops and eventually push and bring the price back up. If the bulls, the buyers, are not stepping in with strength and the sellers are willing to sell at lower prices, the support level will eventually fail to hold and the price will drop down even further. When that happens, the support level now becomes resistance level and the price will keep moving further down until it reaches the next support level. Draw as many lines of support and resistance as you need to, so that before entering a trade, you know exactly where the different levels of support and resistance, floor and ceilings, are.